I think I'm right in saying this, that you were allowing people to move house and keep their tracker mortgages. Is that correct?
We do. Yes.
I think that's got to be acknowledged. And also, Mr. Bell, did I hear you say that on the voluntary surrender, that Ulster Bank, there will usually be a gap between the sale price, and or certainly regularly be a gap between the sale price and the amount owed to the bank, that in cases Ulster Bank is surrendering any legal hold on that debt to the borrower. Is that correct?
We are taking a case-by-case approach, but absolutely where it's necessary and appropriate, we're not seeking to enforce the full shortfall. Yeah.
And surrendering a legal option to do that in the future.
Absolutely.
Well, I'd like to welcome all of those things. I think they're very important. So thank you for those. On the targets, I'd have to say I don't think you have hit the targets. On the PDHs, the owner-occupied, 5,172 offers have been made, but 4,124 of those are legal letters. And therefore, is it safe to say that those legal letters do not include an offer for a restructuring of the mortgage?
There have been many earlier correspondences which will have offered alternative solutions, and they've not been taken up, and they've typically not resulted in any engagement. So we've kind of hit a point where we've got no other option to move the case forward.
I appreciate that, and I have no problem with the legal letters being written, and I think it must be deeply frustrating to have over 1/3 of a customer base not paying anything. I think that must be a deeply frustrating situation to be in. The target, though, for the central bank, the government target, is offers made that the Ulster Bank deemed to be sustainable against a set of criteria. I would put it to you that the legal letters, whilst maybe necessary as part of the ongoing operations of the bank, do not constitute long-term sustainable offers.
They exactly meet the definition with the central bank. We've discussed with the central bank specifically whether the approach we're taking to legal proceedings does indeed count towards the targets, and we've had confirmation that they do.
Would you be willing to provide the committee with that confirmation from the central bank?
We have it in a written form. I'd be happy to. Otherwise, I'm happy to confirm that to you by whatever means you'd like.
Okay, thank you very much. Okay, well, if that's what the central bank says and you have confirmation of that, then I guess when the central bank audits your figures, they'll show that you've hit them. For me, I don't believe that the legal letters meet the spirit of what the government is trying to do here. I believe the real figure is 1,048, which is actually 6% rather than the 20%. However, if what you're saying is you've clarified this with the central bank and they are saying that legal letters, which may result in repossession, obviously nobody wants that, count as offers of sustainable solutions to borrowers, then you've met your targets. I have to say, Chair, if that's the case, I would like to see the Governor of the Central Bank in here as soon as possible.
Well, I'm on record from an earlier meeting, and kind of showboat.
I'm not. No, I'm not remotely showboating.
We're on record. The Governor of the Central Bank is actually scheduled to come in here around the 25th of September.
Okay.
And all committee members are aware of that now at this stage.
Okay, thank you.
So there's no need to be calling for it.
Thank you. I didn't know that, Chair.
If I may just add a couple of comments. Obviously, managing...
Again, Chair.
Managing this problem is not something that you do with one instrument, and I think the way you prevent cases getting into 90 plus arrears is as important of how you deal with cases that have already got into 90 days or more in arrears. We have over 14,500 cases that are either current or less than 90 days past due because we've intervened and found appropriate solutions to customers. We've seen a net reduction of 549 cases in the 90 plus portfolio over the quarter in question. So I would be prepared to stand and say I feel very strongly that we have met the spirit of the intent, which is how do we provide appropriate solutions to people with genuine payment difficulties. The target regime to some extent sits alongside that, which is something we have to do, but it doesn't necessarily drive every action we take.
Thank you for that. Can I ask, in terms of debt write-downs, it seems to me that Ulster Bank has engaged in debt write-downs in terms of the voluntary surrender. Now, I've read reports, Mr. Brown, where you are reported as saying that Ulster Bank will not engage in debt write-downs. Can I ask you, what is the bank's position on debt write-downs being part of some solutions?
So we have a policy of no debt write-downs as part of a solution. As we commented on earlier, as we work through a case and there may be a shortfall once the process is completely exhausted, then the bank, from an accounting perspective, may need to write off that loan. But the reality is that there have been relatively few cases of that so far, because we've only recently got the tools to enable us to address the issue.
Thank you. As part of a personal insolvency arrangement, is it the bank's policy that no personal insolvency arrangement will include a debt write-down?
We support the personal insolvency arrangements that have been put in place, and we'll work through the personal insolvency service on a case-by-case basis. It depends on the individual circumstances.
Could you answer the specific question I asked you? Is it the policy of the bank that debt write-downs will not be included as in circumstances with PIAs?
We've had discussions with the personal insolvency service, and we've observed that a zero coupon split mortgage achieves the same effect and doesn't disadvantage the lender by foregoing a potential interest in a potential future outcome that nobody can predict at this point. And most recent conversations with the personal insolvency service would suggest that is an acceptable way of dealing with the situation. So to try and answer that question,
I'm short on time. It's a yes or no question. It's simply, I'm asking you, what is bank policy that there will be no debt write-downs, yes or no, as part of PIAs?
Our bank policy is that the idea of writing down arbitrary amounts of debt while people stay in the house it isn't something we're going to do.
So the answer is yes, it is bank policy. Is that correct?
Correct.
Thank you. Finally, if I may, Chair, can I ask you, when you are working with the borrower to determine the amount that they can pay where the mortgage is unsustainable, how are you working out? Do you have guidelines? For example, AIB based it off the ISI minimum requirements plus about 20%. What is your bank's approach to determining what a family is left with?
We're using very much the same basic agreement as AIB, but we're also, because we've been able to recruit a significant body of people who are experienced collectors, they have a degree of experience and knowledge which allows us to interrogate things a little bit more than we might otherwise. So it's a combination of the ISI figures with some additional flexibility.
And just finally, can you provide those guidelines to the committee?
They tend to be individual specific, but we can certainly describe what we mean by them, yes.
And maybe give us a few worked examples.
Absolutely, yeah.
Thank you very much.